With low volume, Uber has just drifted around the 80 boundary following the gap up. If these kinds of conditions continue, even average to slightly below average selling volume can easily take price down along the 1.618 arc to put more pressure towards the mid-70s and increase the potential for a bearish continuation towards mid-March. So it would be important to keep consistently closing over 80 and eventually pass over the 1.618 arc, followed by increased daily bullish volume closer to 25 million or more to develop more confidence in the market to cross over 84 within the first half of March. Then just a reminder, the series on the Keltner channel indicator will be released next week, so stay tuned for that. And now to CGC stock price, which presented average but consistent selling volume to end last month, resulting in a gradual crossing under the solid long-term 330 boundary, giving a bearish advantage to establish into this range, in which case it would be important for price to get back over into the upper half of the fan and consistently close over $3 to give more suitable conditions for the development of a bullish reversal range in this area. Similar to the end of last month with the 330 level, sustained contact with the 245 level can result in another bearish continuation, especially if there's no close back over the center fan line by the third week of March. And in such a case, attention could focus down towards these ranges. Then for SMCI stock after today's gap up, continued daily bullish volume over 20 million would be most beneficial for a quick advance over the current arc and over the 1180 level, which marks the beginning of the next major range near the outermost arcs. Alternatively, if there is no strong follow-up towards today's high price, it could be a similar situation to the Uber stock chart where price delays and drifts around in a range like this. And although today's candle is green, with higher volume, it still takes the general form of a bearish star candle, meaning a red close under it, especially within this week, can point to doubt of a quick bullish continuation, which could improve conditions for even average levels of selling volume to fill in the gap towards 900 by the third week of March.